Ladies and gentlemen, welcome back to the channel. Tesla stock at the time of recording this video is down about 2.5%. Now, as we normally do, we will be going over all of your Tesla stock breaking news today, the option activity, what the short sellers are doing. But let's face it, today's another rough day for most areas of this market. What's going on? What do you need to know? Now, we're going to talk the government shutdown, what government officials are saying about the economy, about the shutdown, and much more in today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, let's get started. Now, there's a lot we need to get into in terms of the broader markets. That's the biggest thing affecting Tesla stock today. But I do want to go through some of your Tesla stock news first things first. And we're going to look at the option activity. So today, hedge funds and institutions have placed 86 different trades. These are trades that are being flagged as unusual. The total dollar amount is 53 million, so it's on the lower side as of now versus something like yesterday. You had $722 million worth of option activity. So 53 million is definitely on the slower side. But you do have a positive order value of 80%. So hedge funds and institutions, while the stock is down about 2.5% today, are not nearly as bearish as the stock would reflect. Now, short interest up free float did just recently jump from about 2.5% to 3%. That's a huge jump for a stock like Tesla. Now, the amount of shares sold short is still coming in at 72.32 million. But you could likely see that number jump quite a bit as well over the coming days. Now, on the day today, you have about 343,000 shares that are being covered by hedge funds and institutions. So they're taking the opportunity to cover on these red days. And can you blame them? Elon's comp package just got approved. The government should be opening soon. AI is alive and well, and Tesla is continuing to scale its AI projects. I wouldn't want to be short in Tesla either. Now, something I'll talk about as well before we get into specific company headline news is the technicals. Okay, Tesla stock follows technicals unlike most other stocks. Like Tesla's technicals are incredible the way that it follows these. Now, the stock is sitting right at about the 50-day moving average. It bounced off of that level today, found a lot of support. You also bounced off of this level on November 7th and then proceeded to, go up from there. Now, you really want to see a larger bounce take place here. Generally, you've been consolidating since about mid-September in this range between, $420 on the low side and $460 on the high side. You've been in a pretty tight range for a while now. Well, if we can bounce off this 50-day moving average, if we get the government that reopens and, in my opinion, the economic data that shows the economy is not as bad as feared, that is going to set up a very large rally ahead for Tesla. Let's face it, the pieces are already put into place. Okay, Elon's comp package, robo-taxi expansions, deliveries seem to be going quite well. Looks like we're going to have another strong quarter for Tesla deliveries. The only thing that's really missing is the uncertainty and, really uncertainty around the economy, right? That's the big problem at this point, and that's what continues to drive your risk on areas lower. Now, Tesla is seen as more of a quality risk on it stock because Elon is the CEO, which, that's how it should be, right? But Tesla's down 2% today. A lot of other higher growth, higher risk areas, small cap AI, etc., are down anywhere from 5 to 10% today, pretty uniformly across the board. Like today is not a good day for most of this market. But with that said, let's get into some of your Tesla specific news. In this case, it's not Tesla specific news, but it's Waymo news. Waymo has announced that it is now offering robo-taxi rides on highways across the San Francisco Bay Area Phoenix, and Los Angeles. They say, quote, today we're also opening access across the entire peninsula, expanding service from San Francisco all the way down to San Jose, including curbside service at San Jose Manita International Airport. We're offering freeway access to a growing number of public riders, and we'll introduce the service to more over time, including as we expand freeway capabilities to Austin, Atlanta, and beyond. Yeah, that's going to be crazy. If you can operate a freaking autonomous vehicle in Atlanta highways, that's crazy. They say they're always guided by our commitment to safety and to service excellence. Now, Elon Musk even commented on this recently, saying that, thank you to Waymo, as Waymo has launched in new cities and offered new features. It has made it easier for Tesla to launch as well. Now, you got to keep in mind that Tesla doesn't dominate the robo-taxi market. Waymo does not dominate the robo-taxi market. This is not like, let's say, NVIDIA, for an example, right? NVIDIA basically dominates the AI inference market as far as GPUs, right? They sell the premium product. Well, if you had another company, maybe it's AMD, that comes out with a product that is neck and neck with NVIDIA, that's NVIDIA's market to lose, okay? Versus like Waymo and, Tesla and these startup companies, there is no market. So it's everyone's market to gain. And there's room for everyone for many years to come as far as growth. Tesla's Giga Shanghai factory has built its 5 millionth battery pack. Tesla has released their first ever video of FSD working in South Korea, and that FSD is, quote, coming soon to the country. Now, the White House is considering new steps to limit the power of proxy advisors like Glass Lewis and ISS, as well as major index fund managers, a move both Elon Musk and Jamie Dimon have publicly called for. The Trump administration's officials are discussing at least one executive that could include a broad ban on shareholder recommendations or an order blocking recommendations on companies that have engaged proxy advisors for consulting work. Tesla posted this little short video on the Tesla North America X account, and it basically implies that Tesla is launching in Colombia soon. Liv on X says, it's funny how we're watching FSD grow up like a kid. Elon Musk commented on this and says, you can feel the sentience of the car growing. It is palpable. Now, the Tesla Semi participated in the Reno Veterans Day Parade with a sick rap on this Tesla Semi. Elon Musk says, quote, it is such an honor to work with the incredible people at my company. Now, this article says why Tesla stock is down 2% today, and it says the industry data compiled by Wells Fargo indicated that Tesla sales fell 23% year over year across North America, Europe, China, and South Korea last month. North American deliveries alone dropped 25%, with an estimated 45,000 vehicles sold, compared with nearly 60,000 in September. Analysts attributed part of the decline to the expiration of the U.S. federal $7,500 EV purchase tax credit, which had boosted September sales. Wall Street expects Tesla to deliver about 440,000 vehicles in the fourth quarter, according to FactSet, down from roughly 500,000 in the previous quarter and 496,000 during the same period last year. But that's a very strong number, considering, everyone thought that we were going to have a strong Q3 and then things were going to plummet in Q4. That doesn't look like a plummeting to me. This article says another major takeaway from the shareholder meeting was Musk's indication that Tesla might need to build a gigantic chip fab to secure supply for its next generation AI processors. Analysts said such a move would strengthen Tesla's vertical integration strategy and ensure resilience in the production of the inference brain behind its robotics and AI platform. Now, Geode Capital boosted their Tesla stake by buying 1.2 million shares. Now, Morgan Stanley outlines key drivers for Tesla stock in the next 6 to 12 months. Analyst Adam Jones says beyond Elon's $1 trillion pay package, major factors include Tesla's investment in XAI, quote, deterministic to Tesla's long-term success, FSD V14.3, quote, a steam engine moment as driving shifts from human to algorithm, and plans for a gigantic chip fab to secure AI supply, and Musk's vision for a global AI network powered by idle Teslas. That is that's very interesting. That's something Musk has talked about quite a bit as something they could do in the future. But essentially, they would have like the largest data center in the world if you just use the inference from Teslas that are not being used, that are not being actively driven. You're going to have a massive inference capability to pull from all of those Teslas. And that could be another business line for Tesla in the future. Now, Vanguard also added nearly 1 million Tesla shares in Q3. At the same time, they cut big positions in Nvidia, Microsoft, and Apple, showing a clear shift towards Tesla. And I would imagine that's why Tesla stock has held up so well, despite it being in that high growth, high risk category. If you were to put these companies, right? Like Tesla has a higher valuation, a higher expected growth rate in the future. That means it's riskier, right? Tesla is a more recession risky company than Apple or Google or something like that, right? Just because they sell vehicles, and from the Wall Street perspective, like that's the main thing for Tesla. If you go into a recession, you're not going to sell nearly as many cars. So when I look at that from the Wall Street lens, I'm honestly impressed with the way that Tesla has held up with this market that has been as scared as it has been. See, today, the stock market is not having a good day. It's another one of those days where risk on areas are plummeting. Look at UiPath. This is a company that recently announced a partnership with OpenAI, Snowflake, as well as I believe it was Google to integrate ChatGPT, Snowflake services into the UiPath, which is automation. This company has like 1.7 billion in ARR. It's trading at a $7 billion market cap. It's a well-known company that is emerging into AI in a big way. Stock's down 3% today. Resolve, another one that I own, down 4%. Poet, down 7%. CCCX, quantum company, down over 3.5%. Bitcoin, down about 2% today. It is very much another one of these risk-off days. Now, as I've talked about in prior videos, why is this happening? Well, it makes a lot of sense. Like, I can't deny that. It's because, look, 41 days ago, before the government shut down, people didn't think we were in a recession, but they didn't think things were great either. Fast forward 41 days later, flights are being canceled, food stamps are being cut off, and government workers are not being paid. It makes sense why people think we might be in a recession right now. It makes sense why these higher risk areas, these higher growth, smaller companies are selling off as much as they are. If you're a fund manager and your only objective is to beat the markets, try to beat the markets, although 80% of hedge funds do not, but that's what you're trying to do, and protect shareholder value, protect your investors, what you're going to do is you're going to sell the stocks that are going to go down the most during a recession. That's what is happening. The stocks that Wall Street thinks are going to be hurt the most during a recession are being sold. That makes a lot of logical sense if you think we're in a recession or pretty close to one. I can't argue with that. Now, I believe we are not in a recession, okay? I believe that people are probably a little bit too nervous. And I think, honestly, at this point, you've priced in any of the economic pain that we might be in right now, right? So what's going to happen is we're going to get the government that reopens, and you're likely going to see a positive reaction to even bad economic data because we've likely priced it in already. And number two, it's probably going to be better than feared. Okay, you don't need a 200,000 jobs report to get this market to go higher. You need a negative 20,000 jobs report to get this market to go higher. when the expectation was negative 60,000, well, it makes sense why these more recession vulnerable areas of this market are selling off. Which, if you look at the broader indexes today, you kind of see that the NASDAQ is down 0.5%, Russell 2000 down 0.04%, S&P 500 is down 0.01%, but look at the Dow is up 0.85%. People are saying, hey, if we have to be in anything, we're going to be in the staples, the value, if you will, okay? So you see that represented in the headline indexes as well, but even the headline indexes have not shown what has happened to this market. This market has been really crashing for about a month now, little over a month. Almost exactly when the government shutdown started is when small cap and AI stocks started to really go down. It's not a coincidence. Now the VIX today is up about 3% as, again, fears are rising. It's probably fears the government isn't going to reopen, that the vote is going to fail. Now, the vote is set to happen tonight. And if it passes, then I'm sure Trump will be able to sign the bill by this evening, and the government would be open tomorrow. Now, another big uncertainty we have is, again, does that vote pass or is it held up? Okay. If the vote is held up and the government does not reopen, we're not going to get the economic data we're supposed to get tomorrow. Tomorrow, we're going to be getting some bond auctions. I think some Fed speakers might be scrambled in here, like Fed Hammock right here. But core CPI month over month and year over year, we're supposed to get the October numbers tomorrow if the government is reopened. We're going to be getting all of your initial jobless claims, continuing jobless claims, and the jobless claims 4-week average. This will tell us a lot more about the state of the labor market, the trajectory of the labor market, and what's going on with inflation. Okay, which you have to imagine inflation is coming down. Inflation cannot survive in a weak economy. So there's a question mark whether we're going to get that economic data tomorrow or not, let alone what the numbers are going to look like. So you can see how there's quite a bit of uncertainty over the next, 24 to 48 hours. On Friday, assuming the government is open, we're going to have Fed speakers, Fed Schmidt, Fed Logan, Fed Bostic, but you're also going to get PPI month over month for September and October, retail sales for September and October, and core PPI month over month for September and October. Going to get business inventories for September and August, and some other, subcomponents of the retail sales category. But over the next 48 hours, assuming the government opens tonight, you're going to have a better understanding of how the consumer is doing, how the labor market is doing, and how inflation is doing. But does the government open tonight? We just don't know that at this point. And that's where, a lot of the volatility could be coming in, specifically today in the markets. Now, again, as I've said before in many other videos now, this is really a two-part process. Number one is opening the government. That is in and of itself bullish. But number two, how is the economy doing? Once we get clarity on how the economy is doing, and hopefully, in my opinion, it's better than feared, that's when you start to see the year-end rally kick in. As Wells Fargo said last night, they think we're going to have an everything rally into the end of this year. That has to be somewhat predicated on a stronger economy or stronger economic backdrop than Wall Street is currently forecasting. Now, I'll tell you, typically, when the bar is this low, it pays to be bullish. But not always. That's not a general 100% probability that you should be bullish or that you're going to make money. But normally, for an example, if everyone's expecting CPI to skyrocket, normally it comes in lower than expected. Even if it still is a high number, typically it's going to come in a little bit lower than expected. Same is true right now. Everyone's bearish on the economy. It's probably going to come in not as bad as people think. That's my opinion. Now, we are going to have some earnings as well today and after hours with Cisco. Tomorrow, pre-market, Walt Disney, Bitfarms, JD.com, Billy Buy, PaySafe, Gambling.com, and Canadian Solar. And then tomorrow and after hours, Red Cat, Applied Materials, New, and Virgin Galactic. Scott Bessent today says, quote, train the U.S. workers, then go home. Then the U.S. workers fully take over. We haven't built ships, semiconductors for years in the U.S. Overseas partners come in, teach American workers. That's a home run. Yeah, that sounds too good to be true. But it seems like the administration is softening the stance on some H-1B visa type of work permitting in America. Ed Bostic says, I do not view a severe labor market downturn as the most likely near-term outcome. That sounds great. Honestly, with the markets this bearish, Fed Bostic says, I am not detecting ambiguous, I think I'm saying that right, signals of a serious cyclical labor market downturn. He says that real-time indicators signal job market in a curious state of balance, and Fed Bostic says firms surveyed expect to raise prices well into 2026 and by substantially more than 2%. Now in the news today, the U.S. aims to start lifting flight cuts in a week once the government reopens. U.S. Treasury Secretary Bessent says, quote, we will keep monitoring investor demand for treasuries. Bessent says that stablecoins could grow tenfold by 2030 from $300 billion. Microsoft in the news today expands their data center build out with a super factory site, the company says. Bessent says that treasuries are more liquid and robust than ever. And then basically in the same sentence, he says that Treasury will adjust issuance for auctions gradually to avoid market disruption. So I don't know about that. Anthropic today says they will spend $50 billion on data centers in the US. Now, Fed Bostic will retire February 28, 2026 at the end of his current 5-year term, the Atlanta Fed says. So yeah, we might be getting another more dovish Fed official by early 2026, which is likely going to raise the odds of further rate cuts. Now, Trump will host a private White House dinner with business leaders. President Trump will hold a private White House dinner at 7:30 p.m. Eastern Standard Time, I assume tonight, attended by finance and business leaders, including the CEOs of NASDAQ and JP Morgan Chase. The Wall Street Journal reports the White House is considering new rules on proxy advisors and index fund managers, a topic raised recently by CEOs like Elon Musk and Jamie Dimon. Fed Williams says today, quote, it will not be long before the U.S. Central Bank needs to expand holdings again. That is QE. That is buying assets. That helps to lower interest rates and things like the 10-year treasury yield, which is really what mortgages and auto loans and business loans, even credit cards and credit lines trade off of. Now, AMD stock today soared 10% on strong growth projections as the CEO, Lisa Su, calls AI spending, quote, the right gamble. She says, I don't think it's a big gamble, she said. I think it's the right gamble. She talks about how AI inference and their chips are insatiable, that there's no slowdown in sight for AI investments. She says that data centers are going to grow to be over $1 trillion industry by 2030. And there was some specific comments, specifically around AMD and how they're expecting 45 billion worth of sales soon to the data center industry. Keep in mind, AMD does like 6 billion a quarter, so that would be some pretty incredible growth there. But what it really just sticks out to me is AI is alive and well. That's it. That's the bottom line. Again, if you needed any more proof that AI is alive and well, you have it here with AMD. In the news today as well, White House senior advisor Hassett says the government shutdown will impact this quarter's GDP. And even like Hassett saying things like this is, again, like if we were to get a negative GDP report, it's not like it would be a surprise, right? Like the government is literally telling us that, it's going to be a little bit worse. Now, Hassett says that GDP could be between 1.5 to 2% this quarter, which is much, much stronger than Wall Street would think at this point. Like, we are not pricing in 2% GDP growth. No, you're pricing in basically a recession at this point, or getting pretty close to that. Now, the Trump administration has said they back the bill to end the government shutdown, and Trump will sign it. Now, there was also substantial talks today about the $2,000 tariff checks that would go out to families making less than $100,000 per year. Scott Bessent said it might be in the form of some kind of tax credit or something. So we'll just have to wait and see. But I am watching this situation as well. White House senior advisor Hassett says GDP for this year will be about 2%. Hassett also says that supply side policies will allow growth without inflation. Now, for the markets today, the CNN Fear and Greed Index is coming in at 34. So you're still not even quite to the midpoint of fear. Okay, so this market is in pretty rough shape under the surface. Now, market momentum is greed, stock price strength, extreme fear, stock price breadth, extreme fear. See that there? Put and call options, extreme fear, market volatility is neutral, safe haven demand is greed, and junk bond demand currently in extreme fear. We will get a new AI investor sentiment survey coming out tomorrow. The last one we had showed 38% of investors were bullish, 25.8% were neutral, and 36.3% were bearish. I think we're going to get a big rise in the bears in this upcoming week's AI investor sentiment survey. There's almost no way around it, just with how much pain and carnage you've had in markets under the surface. Now, the Fed rate monitor tool is pricing in a 62.4% chance of a Fed rate cut December 10th and a 37.6% chance of a pause. Now, you are no longer pricing in another cut for January 26th. The odds of a pause sit at 51.3%, and the odds of another cut sit at 27.8%. But the odds of no rate cuts at all, either December or January, sits at about 21% as well. So that's why it's important to get this economic data that we should be getting tomorrow and Friday, as well as CPI. It's really going to move the odds of Fed rate cuts. Hassett says if he's asked to be the Fed chair, that he would do it. He says that if he was at the FOMC, he would be more likely to move to cut rates, while Powell is less likely. Fed Moran says Fed policy is too restrictive. White House senior advisor Hassett says that inflation momentum is pretty directional, which he's talking about directionally lower. Hassett says, I agree with Trump that rates can be a lot lower. Oh, and before we forget to mention this, we're also expecting to hear tariff rates come down substantially on items that we do not grow or produce in the US, like bananas and coffee and other related industries, as soon as tonight or tomorrow. So that could also be a positive catalyst for this market, although it's really all about the economy. Keep in mind, Trump lowered tariffs on China by 10% 2 or 3 weeks ago, and the markets, the NASDAQ was down 1.5% the next day later. Like, when you have recession fears, almost nothing else even matters in markets. And I think there's actually been quite a bit of good news from a policy perspective that has not gotten priced into this market yet, which could come around and be a part of the end of the year rally here. So let me know your thoughts on all of this down below in the comment section. Hit the like button, subscribe to the channel, and check that link out down below in the description of today's episode if you guys want to come join the trading community. We have identified yet again another under the radar AI stock growing at over 400%, trading at less than 2 times sales with major partnerships with companies like IBM. And it's trading less than 2 times sales. Why? Because it's a $300 million market cap, when really it should be probably a $3 billion market cap. But, you know, we'll see in due time. If you guys want to see that stock, come see all the other stocks we are invested in right now, and come be a part of the journey. This is going to be a long journey, a long journey of AI and getting rich. If you guys want to join it, link down below. Have a great rest of your day, and I will see you in the next one.